Hello, everyone. It is the Calgary Real Estate Show. And let me see if I can do this right. I'm trying to go live on, there we go. We're actually live on Instagram as well as Facebook, YouTube, LinkedIn. No matter where you're finding us today, welcome, welcome, welcome. All right, so I got all the
Yeah,
technology figured out. Jaden, where do we find you today?
yeah. I'm in Calgary in my office at in Calgary here, just off of Crowchild and 53rd. So it was a nice day to drive into the city. I like not taking the fastest way, but seeing all the trees growing and the grass, and it's a beautiful time to be driving in Calgary.
It
Yeah,
sure is. Yeah, it's
all the
gorgeous
different
out there
tones of
right now.
green. Yeah,
Yeah.
Yes. Yeah. And I haven't checked lately, but hopefully they got that water main break figured out. Natalie, have you seen any updates?
they haven't provided it and they don't know when it's going to be fixed. So who
Yikes.
knows?
Yikes, yikes. Well, in any case, welcome back, everyone. And so, if you're seeing this for the first time on Instagram, we do this on a monthly basis. And this is our weekly basis, but this is our monthly wrap up. So, we're going to get to the full month recap here a little bit later. But it's always interesting. We do track these stats weekly. So, we get a picture by the end of the month of really what's going on, even before the stats come out. But we wanted to pass those on to you today. So, for the first time in what feels like forever, new
Yeah.
listings were 665, sold 660. Now I pull these I try between 11 to 11:30 every Thursday morning, just to give some, what's the word I'm looking for?
Consistency,
Consistency and yeah, for the data. But that
accuracy.
was what it showed me, about 45 minutes ago. Sale to new listing ratio then of 99%, pendings of 576. So that was up significantly from last week. Days on
hmm
market of 19, and then active and pendings. And then when we look at last year, really interesting. Hey, Natalie?
Yeah. So last year, this week, we had 707 sales. This week, 631. So we're down 11%. New listings last year was 873. This year, 932. So we're actually up 7%. Actives last year, 3367. This year, 3374. So it's up 2.21%, pretty much the same. And days on market last year, 22. This year, 19. So it's down 14% still.
Yeah. We're going to, this is just so, and I said earlier in my just kind of brief recap the other day, it's like it just was such an interesting month, which leads us into interest rates. And that's the big news of the week for Jaden. For the first time in 2 years, was it? We saw a rate drop.
Excuse me, just getting that cough out. Actually, the first time in over 4 years that we've
Yeah.
seen a rate drop.
What?
2020 was the last time, and so we had that consistent lowering of rates during COVID, and then it just kind of plateaued for a little while and stayed there for quite a while.
Yeah.
But 4 years since we've had a rate drop, this has been a long time coming. I think a lot
hmm
of people who follow things closely might say that they took probably a little bit longer than they should have. But it's interesting, right? These decisions aren't made in a vacuum, obviously, and there's other things going on in the economy. They took probably a little bit too long to start raising things, which really let inflation get out of control. And now I think they probably waited a little bit long to start lowering things. So it was just interesting. The last pattern when they raised things, it was kind of a quarter point. Oh wait, this is not doing anything. We better hurry our butts up. Half a point, three quarters point, a whole point up. So it'll be interesting to see what happens on the way down. I think we're seeing just kind of similar stats, but in the reverse to what happened when we were going on the way up. Like if you look at inflation now and you take out actual housing costs, it's at like below 1%. And that's not a
Right.
good thing for our economy, right? So,
No.
things like GDP per capita, all those kinds of things. So it's really going to be interesting if we see, a similar kind of lowering as we saw in the raising. And historically, that's what we see. It kind of goes down as quickly as it came up. I will say the caveat for me is that we're not going to get back to those like hyper low rates that we had during COVID.
hmm
Mhm.
But my prediction, of course, I didn't think it was going to get this high or stay this high this long. But my prediction is that we're going to see kind of get back into that 2.5 to 3.5% on interest rates by 2025, which I would say is kind of standard for the Canadian economy over the last 20 years.
Mhm.
Just based on the debt that I'm seeing people come in with, and trying to buy houses that are are considerably more expensive and things like that. That kind of seems to be the sweet spot to keep the Canadian economy rolling along. So we'll see where things go. I'll tell you, I have a lot of happy clients. I have a lot of people that are confused about things as well, but it was a good day for everybody yesterday.
Yeah, for sure. And I think, so let's just break this down a little bit more because this is one of the big things of the week, obviously. So clearly the variable people are jumping for joy because that's maybe a sign that things are going to start coming down. So they're going to get a very, pretty immediate relief out of this. But when do you expect some of the lenders to start dropping rates? Because it's tied into bond rates, and just explain that for people.
Yeah, so basically, because this is what I'm hearing a lot, right? So, oh, that's great that we're down to a 4.75% rate. Well, no, actually, the overnight rate is what prime is based on. Prime was 7.2, now it's 6.95, and so yes, those variable people get that instant quarter point relief. But what we are seeing in the bond market is the bond market reacts to this. They're not tied hand in hand, but it's saying, okay, we are also seeing rate drops coming throughout the year. Our yields are getting lower on our bonds because we want to get into the stock market and things like that. And so that we haven't seen any immediate movement, but we've seen things go down significantly in the bond market. So if you're getting a mortgage right now, like let's say your closing is within the next 2 months, you got to make sure that your banker or your mortgage broker is on top of what's happening with fixed rates as well. Because if things go down between now and closing, like if you're signed into that, there's a great 3-year 4.99 right now. If you're signed in at that, that's great. But if your closing is a month out, maybe you're going to end up with a 4.74 or a 4.54 or something like that. So just because you sign that commitment doesn't mean the work is done. There's still work to be done prior to close.
Okay, right. Perfect. And I think for sellers, like, okay, what does it mean for a seller? Well, does this, and somebody, a great realtor friend of ours, post this question in one of our realtor Facebook groups is, okay, well, what's going to happen to the market now? Because I mean, up until this month, things have been bonkers, and they still were bonkers. We'll get to that here in a second. But does this continue to make it even more bonkerish? That's a new word I just came up with. I think it does, right? Like now people are going to be going, okay, well, just a little bit more affordability. I can maybe get into the house I couldn't have gotten into a month or two ago. And, does this motivate some sellers who are on the fence? I guess only time will tell, right? But we're going to be keeping an eye on it and report back weekly here for you. So same community events. I know Lilac Fest was last weekend. Our daughter went, had a great time, and Stampede is coming up. So get your Stampede tickets. Actually, the Primo, like the El Primo seats were already sold out for every day of Stampede. That was as of my last Stampede meeting a few weeks ago. So I think this is going to be a big, big Stampede. So if you're thinking about going, one of my top hacks as a Calgarian is you buy standing room tickets. You stand now if you're not going with kids, if you're going with your buddies, your friends, it's a date night or whatever, stand on the tarmac, especially for the evening show, because you can get right up to the rail and you can see the rolling thunder of those chuck wagons, and then you kind of just scoot your way over to right in front of the stage. We saw Dean Brody there a couple of years ago, right up front. It was awesome. So keep thinking about Stampede. That is my pro tip. And this is just, I love this. Can we get this, Natalie?
Oh, I love this. Yeah, isn't it fun? I'm not sure where it drains into. There's sort of that weird hole on the bottom. I'm like, does it just go straight through? But anyway, it's that month-end thing, so we just do fun photos. So this is the bathroom edition. So this, you have an observation deck. So, while you're doing your business, someone's sitting in a chair up top watching you. Oh, I love it. A literal water closet. Like you just open the cabinet, go to the bathroom, off you go. This was the house built around a tub. I don't even know.
Where do you find these things?
Well, this is all from, except for the golden horse at the beginning. These are from an Instagram account called Please Hate These Things. And the pictures are something to behold. I love it. The luxury. I'm sorry. I wasn't sure if this was inappropriate, but I thought it was hilarious. So I had to put it in.
All right, let's just move on from there. Anyway, just one more time. Now we'll move on. Oh, that is some funny stuff. Anyway, let's move on. That's from the mind of Natalie Newstater. And There you go. So let's do our monthly market recap. So yeah, very, very interesting month. And I think we were seeing this as the month was kind of all right. Well, we're back. We completely lost Wi-Fi, so I don't know. I have no idea what happened. Now we're gonna have to
Yeah.
reload the slides. So let's just get to. We'll just go past that.
The last one. There we go.
Just go there. Oh, it keeps wanting to go back to that. I don't know what happened there. That's crazy. Yeah, we just completely lost Wi-Fi. So we apologize for that. And I'm not sure what happened on Instagram, but in any case, we're back now. So sorry for that brief pause. Let's just move my camera over here a little bit. Pardon me. I'm more in the center. There we go. All right. So recapping the month. So the overall benchmark price still went up 9.5%. Our sales down basically 1 percentage point. New listings though, I mean, and that we were noticing that during the month, right? Up almost 19%. Yep. Inventory up almost 6%. Months of supply, but this is what's interesting, right? Like months of supply was still just over 1 month. I mean, it was a 6.7% increase, which is nothing. Days on market at 19, which is actually down from last year. And that's why it's a little befuddling. So when we break down the segments here, Detached sales were down 7%, new listings up 13%, our total inventory ended the month up 8% year over year. And then our sale to new listing ratio, I mean, that is the lowest it's been in what feels like forever at 68%. And our months of supply, though, still under a month. So despite a sale to new listing ratio of less than 70%, we're still under a month of supply, and that's up 15% year over year. And our price still went up 13% year over year to 761.8. On the semi-detached side, very similar stats. Sales down 7%, new listings up 34% year over year. So that gave our inventory a 16% bump. Sale to new listing ratio 72%, and just over a month of supply, and that's up 25%. Prices again went up 678. That's up 13% year over year. And then row townhouses, the sales are up 9%, new listings up 22%. That ended up 4% up total inventory wise, 78% sale to new listing ratio. It is the top performing segment out of any of them, I would say, over the last couple of years. Prices rose 19% to 462.5. And then apartment condos, a ton of sales, 6% up from last year, but are new because that was bumped by actual inventory hitting the market, right? Whether it's an investor that just doesn't want to, have an investment property anymore. Interesting story. The last one we sold on the condo side was to one of our investor clients. She's a long-term rental person, but that particular building started banning short-term rentals / Airbnbs or Verbos. So they were out. It's like, we're done. But she was able to snap that up. So maybe that's why some of the change is happening on the apartment condo side. So total supply is at 1.22 months. That's down 4%. The price went up 18% for apartment condos.
Wow.
So I'm just going to do a little bit different recap now for Airdrie, Okotoks, and Cochrane. I'm just going to share my screen here. So give me 1 second. All right. So on the Airdrie side of things, so sales, 210, that was up 6.7% year over year. Year to date, they're up 16.7%. New listings were up just under 9%, 278. Inventory also up 9%. And then as we just scroll this up a little bit, sorry, total inventory, that's Okotoks. Let me get to the right screen here. Apologies. Total inventory up 8.9%, months of supply 0.99. So very similar to Calgary, about a month of supply. On the segment side of things, the detached price up 11.5%. And look at all the trend arrows there, right? So despite what's going on, we're still seeing month over month increase. I'm going to end off the show today with a bit of a cautionary tale. Row price up 16.4, apartment price up 26.4% in Airdrie. So which is just crazy. So now I'm going to sorry guys, share screen. There we go.
We're all having a technical day today.
It's a technical day. What are you going to do, right? Like that's just
exactly
just what you got to do. So on the Okotoks side of things, so sales 75. That's basically flat to last year at the same time. New listings up almost 15%. Inventory up almost just over 18%. Months of supply again 1.12, very very low. Detached price rose 9.5%, row price up 13.3%, apartments up 11.2%, and semi-detached up 11.5%. So then let's end things off up in Cochrane. Share screen, there we go. Cochrane, let's go to Cochrane. So in Cochrane, they had 130 sales, that was up 6.5%. New listings actually down over last year, 2.2%. But remember last year in Cochrane, they were like, there was a lot of new inventory coming on. So total inventory, same 132, that's slightly down. Months of supply at 1 month, right? So that's the constant amongst Calgary, Airdrie, Cochrane, Okotoks. I almost said something very bad there, so glad that didn't slip out. I almost meshed two of our bedroom cities. So that's the the common thread in all this is about a month of supply. I think I'm having some issues from Natalie's slide earlier. So the detached price.
Don't put it on me.
Yeah, exactly. The detached price up 10.4%. Semi-detached up 10.9, 10.3 for row. So row hasn't gone up as much in Cochrane as it has in Calgary, the other areas, but apartments just really soared in Cochrane in the month of May. So this has been a very long live, so we apologize for this as we had some technical issues. But I was mentioning last night in our business networking group, Jaden, what is your opinion I know you're on the mortgage broker side, but what I kind of feel is that this is going to create more of a crazy market if rates continue to come down.
Yeah, honestly, I think we get all of these national news media things, and they're not taking into context. This is why this is the Calgary Real Estate Show, because we continue to have strong net migration. Oil prices are reasonable, all those kinds of things. So the economy seems to be doing well here, no matter what's going on everywhere else. And so I'm great with you, Mark. Like, there's going to continue to be, going forward, people who are just pushed to their limit in Ontario and British Columbia, who sell their places, come here and buy places for cash, right? So I think that you're going to get that those renters as well that are thinking like, okay, I need to get into the market. Rates are coming down. Now is my time, and they're going to be competing with them. So I think you're right. I think we're going into probably a very, very busy summer. I don't think we're going to get July off this year. You're gonna be busy stampeding and this year.
Exactly. So in May, on average, the segments from April to May rose 1.5%. So we've talked about this before, right? Where it's like, do you wait? Do you not wait? Do interest rates help you? And I know Jane, your sidekick, Steve Fletcher, at our business networking group, we talk about dating the rate and marrying the house, right? At least having a long-term, like maybe not a full marriage to the house. It might not be your forever home. And here's why that might be something you may want to consider. So if that 1.5%, now some people are going to say, well, it's not going to go up 1.5 points every month. But let's say worst case scenario, okay? Worst case scenario, for the next 6 months, it goes up 1.5% for each segment. That's 9% increase between now and 6 months from now. 9%. So the home that detached home that you really liked in June is now going to go up $68,000. That semi-detached home is going to go up $61,000, $41,000 for that townhouse you liked, and that apartment is going to go up $30K. So let's just, even for detached, let's cut that in half. Let's say it's $34,000. I'm not sure, Jaden, can an interest rate go down that much in 6 months to accommodate for that kind of price increase?
No, you're not. Like no, you're not getting a 6 month. It's just not happening, right? So, no, you're absolutely right. Now is the time. Like we've been talking about this for 6 months. Don't worry about the rate. Just worry about what the market is doing and get into the market if you're ready to get in.
Yeah, exactly. All right. Well, this is dragged on now for almost 23 minutes.
The longest real estate show ever.
Yeah, longest ever. It's a marathon. But thanks for watching. I hope you got some value out of that, no matter what platform you're watching on. I'm not sure what happened on Instagram, but I guess we'll find out. And we'll see you all in 7 days.
Hi, guys.
Bye.